on Nam, Pinyu.
Yes.
Well done. So now I think this shouldn't be a problem with you. So they say paid 1900 on the account payable created in transaction 3. You can refer to transaction 3 as well, but this transaction is self-explanatory. Paid 1900 on account payable. So which two accounts are going to hit? Now you guys need to tell me. Which two accounts?
Asset and liability.
Yes, but account name, that is a broader category.
Account payable to cash.
Well done. You just pronounced the entry. I was just talking about which two accounts are going to hit. That's good. So paid, it means cash is going to include it. Against account payable, so account payable already the account name. So when you pay cash, cash is decrease. When you pay liability, it means the outsider claim is now decrease. So liability also decrease. So now convert it into debit credit. So cash decrease mean credit. Accounts payable decrease mean debit. So how you say the entry? First debit, accounts payable to cash. Right? And then we just have to post it. Accounts payable we already opened in transaction 3 and now just post it. So accounts payable is debited 1900, so we write it down here. And cash is credited with 1900, so we write it down credit side on here as well. So you see, clear everything? Now record this transaction. Received 1000 on account. So which two accounts are going to hit? First of all, receive, it means receive cash, okay? Cash is going to be, so what is the other account name? It's up to you. Now think about that. What is that one?
Accounts receivable.
Why you say account receivable?
Because received 1000.
So normally in normal business operation, we receive money from home, of course, from our customers. In normal business transaction, to whom we pay? Our suppliers, accounts payable. So this is the transaction in which we receive money. So in normal, otherwise, this question gonna mention that we receive money, we receive 10,000 from a worker or whatsoever, we receive 1,000 from supplier, or we receive 1,000 for loan provider. So if question is silent, then automatically assume that this is a normal business routine. So in normal business routine, business receive cash from customers. In normal business routine, business pay cash to suppliers, right? So which two accounts are? We have cash and accounts receivable. So when you receive cash, cash is, and when customer paid us the cash, paid the company cash, their amount is decreased, right? So how much they have paid? 1,000. So now cash increase mean debit, account receivable decrease mean asset decrease mean. So what is the entry here?
Right.
Cash to account receivable. So we just recorded here, and account receivable 3,000. Cash is going to be debited, so we write it down on the debit side. So we already have the account receivable, so we just write it down on the credit side, right? 10th, sold land for cash, land cost 22,000. So we do have land previously, land account, land T account as well. So we'll see, but let's make the entry. So can you say the entry? Let me ask from Marilyn. Marilyn, please say the entry.
Land, no.
First, analyze the transaction here. Sold land for cash, which means cash is coming to the business or cash is going out from the business?
Cash is coming to the business.
Coming to the business. So cash is positive or negative?
Is positive.
Well done. So you sold the land. So of course there is a next account will be a land. So land is decreasing or increasing?
Decreasing.
So now cash is positive. Cash is debited or credited?
Is debited, so it's cash to land.
Well done.
Okay.
Cash to land. So we already have the land T account, 40,000. All you need to do, you need to post it accordingly. So cash is debited, so cash would be written here on the debit side. Land is credited, so land would be written on the credit side. Here we go. Now the last one I think is declared and paid dividend 2100 to the stockholders. So declared and paid, it means paid mean cash. Which two accounts are? We have a cash account and we have a dividend account. So when you pay cash 2100, cash is decrease or increase? Decrease. When you pay the dividend, dividend increase. So when cash is decrease, credit, dividend increase mean debit. How you pronounce the entry? How you say the entry? Dividend to cash. So we already have the cash T account. So we post it. Yes. Deon, you were saying something? Deon. Okay. So we just post it here, right? So now, so this is a summary of all the accounts we have created from this question. This 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 transactions. So you see the balance is 33,300. How we came up with this balance? First, you add all these 50,000 plus 7,000 plus 10,000 plus 1,000 plus 22,000. Answer would be, you open your calculator, you write it down here, plus 7,000 plus 1,000 plus 22 is equal to 80,000. And if we add to the credit side, 40,000 plus 2,700 plus 1,900 plus 2,100. So the credit side total is 46,700. So which side is greater? The debit side or credit side? So this is the debit side and this is the credit side. Of course, debit side is greater. So we will write down the balance on the debit side. How much? So 80,000 minus the 46,700 answer would be 33,300. Or you can say that the debit side of the cash is 33,300 greater than the credit side of the cash. So similarly, what is the balance of the accounts payable? Do you see which side is greater, credit? Let me clear the mess here. So the credit side is greater, how much? The difference is written down here. This is just the balance here, right? So we have written it down, all the accounts, and we have posted it, and we find out the balance. So what is the balance right now in cash after receiving the payment and after paying the payments? We have a balance of 33,300. What is the balance of our revenue? The balance of our revenue is 10,000. What is the balance of our land? How much land we have in our asset? So balance of land is only 18,000. How much customers still need to pay us? This is the balance. So the customers still need to pay us 2,000. Right, everyone? This is how we interpret it. So this is just for one by one. So this is after the posting, we just find out the balance here. So this is just a balance one, right? And now take out your mobile phones, take a picture. I am going to create a breakout room activity. This is a group activity. You need to solve it in group. I'm making 3 groups. Okay, so those who are watching it, so I'm just going to pause the video here, and we will be resuming the video once we complete the breakout room activity. Okay, class, welcome back after the breakout room activity. So I have received your activity. Please now compare the answer. Let me read the illustration here. So architect Wendy Lim purchased supplies on account 5,000, and then later Wendy paid 1,400 on account. So we have a 2 transactions here. First one is that the architect Wendy Lim, which is a business, they purchase supplies on account. So when they purchase supply on account, so which 2 accounts are going to hit? First of all, supplies, and on account means you are purchasing, so you are purchasing from supplier. So if supplies increase, accounts payable increase. Supplies increase mean debit, accounts payable is our liability, liability increase mean credit. So our first transaction would be supplies to accounts payable 5,000. Right? So those who write it down, supply to cash, no, because we didn't say that we purchase on cash. This is purchased on account. On account means the money you did not pay, you will pay later, right? Okay. Now later, Wendy paid 1,400 on account. So paid 1,400, which means cash is going to include it. And since cash paid, so to whom we pay? We pay to accounts payable. So you tell me, when cash is paid, cash is on the negative. Accounts payable, also negative, because we pay to our suppliers. Suppliers